I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So for September 20th here, let's take a look at markets which are called down this Monday morning. And I wanted to re-emphasize a method that I talk about a lot every now and then, because it's gonna give you some insight into the potential for any instrument you own showing signs of cracking, aka major sell signal. So take any instrument that has been moving higher, which by the way is the case for most instruments since the market has been on a bullish run. So the instrument, after some nice move, settles down, and let's say it's a weekly chart or monthly chart or daily chart, pulls back a little bit, attempts to break out. Now let's call this number 1, which is the weekly or daily or monthly close based on your time frame. And then let's call this as a either monthly, weekly or daily closing low, and we'll call that number 2. So let's call this number 1 because it's a breakout. Let's give it green. Now, essentially what the stock is doing with the pullback is forming a new base, going sideways for a while. And at some point, there is a breakout attempt. Now, if this breakout attempt fails and it starts drifting lower, that is your first red flag that something is not right with the instrument. So it's a warning sign. The failed breakout is a warning sign. Secondly, should the stock go on later on to break below the base, this base formation here, if it breaks below that base, then that break is a fresh sell signal because it's your second red flag. And it means that chances are very high with those 2 red flags, the odds are very high that the next trend could be down, or the risk is very high that the next major trend is down because of these 2 subsequent red flags: a failed breakout and then also violation of the base by moving below the time frame on a closing basis, below the lows of a weekly, daily or monthly chart, which in this example is this close right there. Now let's take a look at some examples. Oh, by the way, as a reminder, remember, I'm going to have the link to that playlist explaining this concept in detail. Again, the playlist is going to be linked in the description of this video, and it's got lots of examples talking about these 2 wrongs. Study at your own pace, but it's a good method to understand the probability of things changing after a winning bullish run. Here's a good example of a nice run in a stock, but since the highs of February, March of 2021, we've seen a gradual move lower. Now let's go and highlight where it gave us those 2 wrongs. So there's a weekly closing high. By the way, this is 2 years of weekly data, 2-year weekly. And the stock, if you care to know, is RNG, one of the better performing stocks in 2020. All right, there is a breakout here that was successful for a couple of weeks before it failed right there. That's your first red flag that something is not right because of that failure to sustain levels above the prior breakout. And then we have the weekly closing low right there. And now notice what happened when we broke below this range. That was your second red flag. And a reason to be out of the stock, ask questions later. In other words, this was a massive confirmation of downward momentum, a reason to get out at that time and space, I guess. Let's take a look at a recent example here. It is Electronic Arts, EA. This is 3 years of monthly data. Same concept, monthly. Again, this is EA. Notice here, we have a breakout level based on this monthly high, and the instrument for many months tried to break out. And we can say there was a successful close above that range, albeit slightly, right there. And by the way, come on. How many failed breakouts do you want to see? Failed breakout, failed breakout, failed breakout, failed breakout attempt. And then this right there, that move back below the green line was confirmation of, let's call it, failure, lack of momentum. That's your first red flag. Second red flag is happening this month. Why? Because there's a monthly closing low right there, and as of this moment, we are breaking below that. So we can say on a month-to-month basis, this is giving a fresh sell signal. It just means that the odds are very high that the next major trend after this red flag is down, unless it can find support back above this monthly closing low. But for now, it looks like a sell signal on a monthly chart. Let's take a look at one more. And this is an ETF that captures the financial space, the XLF. And again, this is 3 years of monthly data. Now, you can see this clearly on a monthly chart. Couple of things, of course. Number one, there was this breakout about a month ago or last month. Now that breakout has turned down, or let's say has failed as of this moment, which is red flag number one. And what we are seeing right now, remember the month is not over, but we are starting to see signs that this recent monthly closing low is just being broken right now. So if it stays below the 36.5-ish price level, which is this monthly closing low, if it stays below that level, then that is your second red flag and a reason to be concerned that the next major trend for this instrument and potentially for the general markets globally could be down. And again, this is based on my own original concept, which I call timing to bearish wrongs. Simple concept, and yet very useful and powerful. So now you know. Oh, by the way, if you don't mind me mentioning, this is just a sample. The full playlist, detailed playlist, is gonna be on my website, muade.com. But I would say what you see on the free version is sufficient, to be honest. There's way more when you log into my website, of course. This and many other original concepts. And so it is. I am Eric Muade with muade.com, and I leave you, beloveds, in the love and in the light of the one infinite creator. Go forth, therefore, rejoicing in the power and in the peace of the one creator, Adonai.